Washington state appears to be building its own coffin as I sit here talking to you. And I'm talking about the impending income tax. So for years, we sat back and we watched California make these exact same mistakes. We watched them target their greatest innovators and suffocate their small businesses and drive their wealth across state lines to states like Texas and Florida. We thought in Washington that we were smarter than them. We thought that our economy was bulletproof. Guess what? We were wrong, because right now in Olympia, politicians are pushing through the most aggressive, deceptive, and economically destructive piece of legislation in Washington state's history, which is Senate Bill 6346, the so-called Millionaires Tax. Well, I am real estate broker Leah Courage, and today I am deeply concerned and I'm pretty pissed off. And honestly, you should be too, no matter how much money you make, because I guarantee you this income tax will apply to you eventually. And if you watched our last video on the income tax, then you know that I don't do sugar-coated press release news recaps. So today we are exposing the ultimate political betrayal. We are going to look at exactly how Olympia just legally bypassed a direct mandate from the voters, the massive financial trap that they've set for local small businesses, and the historic tax avalanche that's already forcing our biggest job creators to pack their bags and hit the road. So if you own, say, a home, if you run a business, or if you just want to be able to afford to live in Washington state in, say, 5 years from now, don't click away, because the game is rigged, the clock is ticking, and the economic fallout, honestly, is coming straight for your property value. So let's dive in. Just days ago, February 16th, 2026, the Washington State Senate passed Senate Bill 6346, with which they've cleverly coined the Millionaires Tax. Sounds really interesting, doesn't it? In a 27-22 vote. And that's despite the fact that voters passed Initiative 2111 in 2024, which explicitly banned state and local personal income taxes. But despite that, the legislature is still pushing this forward. So here's a fun fact, by the way. Did you know that Washington state voters have historically rejected an income tax at the ballot box every single time it's come up since 1933, or 11 times? Also, over 448,000 Washingtonians signed Initiative 2111 in 2024 to explicitly ban the state and local governments from imposing an income tax. Well, guess what? It passed the state legislature with overwhelming bipartisan support back then. Initiative 2111 I'm talking about. It was a 76-21 vote in the House and 38-11 in the Senate. Overwhelming, right? But this new bill specifically writes in an exemption to bypass that exact law that they just signed in 2 years ago. So my question for you is, did the exact same lawmakers who voted for the ban in 2024 just turn on their heels and vote for the income tax in 2026? Yes, absolutely yes. So when the Senate passed Senate Bill 6346 just days ago, by the way, again, in a 27-22 vote, almost every single Democrat voted for it. Only 2 did not. And many of those exact same senators voted to pass Initiative 2111 just 2 years ago. So why'd they do it? Well, guess what? It was a calculated political trap. So in Washington state, if an initiative gets enough signatures, then the legislature has 2 different choices. They can either adopt it into law themselves, or they can let it go to the ballot for the voters to decide in November. So in 2024, the majority party knew that Initiative 2111, that if it went up in November, that to the ballot, that it would actually drive massive voter turnout from ultra angry taxpayers. So guess what? They played a game. So they voted to pass it themselves in order to keep it off the ballot. They smiled, and then they patted taxpayers on the back and they said, "Oh, look, we agree with you. No income tax." But here's the caveat. Under Washington state law, the legislature only has to wait 2 years before they can amend or repeal a citizen initiative with a simple majority vote. Well, guess what happened? The clock struck midnight on that 2-year window, and they instantly dropped Senate Bill 6346. And guess what? Page 2 of the bill summary explicitly states that the bill, quote, exempts the individual income tax from a statutory prohibition on state and local income taxes. They literally wrote a loophole to bypass the law they just passed 24 months ago. So as an aside, when Senate Bill 6346 had its public hearing in the Senate Ways and Means Committee, more than 61,000 citizens officially signed in as opposed on both sides of the aisle. That broke all legislative records for public engagement in the state's history. So now that the bill has passed the Senate and is scheduled for a hearing in the House Finance Committee, which, by the way, is set for February 24th, 2026, it's already gained, even before this recording, 20,000 people having signed against it before the hearing has even started. So also, the National Federation of Independent Business, or NFIB, as its acronym is called, polled their Washington state members specifically on this Millionaires Tax proposal. 98% of the NFIB members oppose the bill. They are citing the, quote, pass-through trap, and we're going to talk about exactly what that is later, because they're warning that it will destroy cash flow for businesses that reinvest their earnings. It absolutely will. I can't believe what's happening. Get ready for it. So here's what the current bill says, and here is what exact specifics of the bill are as it heads to the House of Representatives. So the mechanism is that it imposes a 9.9% tax on personal household income exceeding, for the moment, $1 million a year. If it's passed and signed into law, then the tax would take effect on January 1st, 2028, with collections starting in 2029. It's estimated to generate roughly $3.7 billion annually. So here's the spoonful of sugar that they used to get it passed. They tacked on exemptions. It expands the working family's tax credit, and it eliminates the sales tax on personal hygiene products. And it also exempts businesses grossing under $300,000 from the tax starting in 2029. For now, by the way, of course. So Governor Bob Ferguson is supporting the concept of the tax, but he is currently arguing, or at least apparently outwardly arguing, with the Senate over the revenue. He's threatening that he's not going to sign it unless more of the money is directed back to small businesses and low-income families. Although, let's be honest, we all know that politicians do an excellent job of operating entirely differently behind closed doors. So as you might imagine, there is considerable backlash happening all around this bill. So business leaders the world over are sounding the alarm. The Economic Alliance of Snohomish County and also the Everett Chamber of Commerce have both come out absolutely swinging against it. So they're citing exactly what I warned about in my last video, which is things like capital flight, reduced housing starts, a super tightening luxury market, and also the fact that this is tax layering. It's not tax reform. The politicians in Olympia are on TV right now trying to tell you, relax, it only hits the millionaires, it doesn't hit the small businesses. That, my friends, is a lie by omission. And it all comes down to this little thing that I mentioned earlier called a pass-through entity. So you see, over 90% of businesses in America and right here in Washington state are not massively publicly traded C corporations. They're smaller, they're LLCs, they're S corps, and they are sole proprietorships. They are the plumbers, the electricians, the real estate brokerages, and the local restaurant groups. These are called pass-through businesses. So that means that the business itself doesn't pay a corporate income tax. So instead, the profits pass through directly to the owner's personal individual tax return. So if you own a successful local construction company and that business, say, nets over $1 million, well, guess what? Under Senate Bill 6346, the state is going to hit your personal tax return with a 9.9% penalty. And here's the sickest part. They tax you on that money even if you leave it in the business bank account to buy new trucks or hire new employees or survive a slow winter. It effectively taxes money that you don't even get to take home. It destroys a small business's cash flow. But the danger doesn't stop at the business owners. It's coming for the W-2 employees too. Right now, the Washington State Constitution says that income is property and property must be taxed uniformly. You can't tax one person's property at 0% and your neighbor's at 9.9%. The state Supreme Court ruled on this way back in 1933 in a famous case called Culleton versus Chase. The sponsors of this new bill know exactly this. They passed this unconstitutional tax on purpose. They want to be sued. They are banking on the current progressive leading state Supreme Court to completely overturn that 90-year-old ruling. And guess what? If they win, if the court says, you know what, income isn't property anymore, the floodgates are permanently open. So in that $1 million threshold that they're promising you, guess what? Also not protected by the Constitution. It's just a line of text in a statute. The second the Supreme Court gives them the green light, Olympia can lower that threshold to $500,000 and then $250,000 and then $100,000 or even less. They are building the trap for the billionaires, but they are going to use it to catch the rapidly shrinking middle class. Guaranteed. And if that wasn't bad enough, then there's a possibly even greater issue, and that's this. It's big tech's response, which is, and I quote, catastrophic. The tech sector is not taking Senate Bill 6346 lightly, and they're not just talking about leaving. They're actually warning that the next generation of tech companies won't even start here. So Seattle-based venture capitalists and tech leaders are publicly calling the compounding taxes, as I said earlier, catastrophic for entrepreneurs. They're warning that if Senate Bill 6346 passes, it will result in an immediate talent drain, as they've called it, effectively telling homegrown startups to just go build somewhere else. And trust me, they will. Tech researchers are also pointing out that while current giants like Microsoft might weather the storm, or maybe they choose to leave, nobody will relocate to start their company in Seattle if they are immediately punished, that is, with a 9.9% penalty on their success. Also, we already have proof that tech money has legs. Just look at Seattle's payroll expense tax, the PET. So that targeted large corporations like Amazon and Expedia. The city's recent PET revenue report just came up $47 million short of projections. Why? Because the companies didn't pay it. They pushed the jobs over to Bellevue or out of the state entirely. Also, Association of Washington Businesses, AWB, just released their winter 2026 quarterly survey, and the results are a massive red flag for the state's economy. A staggering 44% of business leaders reported that they are actively considering moving their personal residence out of Washington state. They're primarily looking at Idaho, Montana, Wyoming, and Arizona. All have better tax situations than we do here. 17% of businesses explicitly state that they are planning to move, actively planning to move their operations out of Washington. That is nearly double the number from just 1 year ago at 9%. When asked about growth, 30% of businesses said that they are now choosing to expand their operations officially outside of Washington state rather than growing locally. 64% of respondents cited the overall tax burden as their absolute number one business challenge. But here is the most incredible, insulting, illogical, and totally tone-deaf part of this entire Senate Bill 6346 conversation, as if it wasn't bad enough already. The proposed income tax is not happening just in a vacuum. It's coming right on the heels of the biggest tax increase in Washington state history, and you'd better believe I'm going to talk about it. So just last year, Olympia passed the 2025 to 2027 operating budget, and instead of tightening their belts, which they desperately needed to do, they naturally reached right into your pockets. They hit businesses, they hit consumers, they hit drivers, and they even hit your weekend camping trips. So let's talk about that for a minute, because if you want to know why businesses are actively preparing to leave, then you need to see the whole broad picture. So here is the exact breakdown of what just went up. So first, they significantly raised the business and occupation tax, or otherwise known as the B&O tax. If you aren't a business owner, then you might not understand how this works, but trust me, it's brutal. So the B&O tax is essentially a tax on gross revenue and not net profit. That is not good for businesses. And that means that the state taxes you on every dollar that comes through the door, even if your business is losing money. And last year, they cranked that dial way up. So the B&O tax jumped by a massive 20% for service business with over $5 million in gross receipts. They slapped a huge new penalty on taxes on high grossing companies and big banks, and they absolutely exploded the advanced computing surcharge on really big tech companies from 1.22% up to 7.5%, which is essentially a massive targeted penalty tax aimed exclusively at big tech. You think big tech's excited about this? Ha! They even started hitting your neighborhood self-storage units with the B&O tax. So number 2, we're talking about the sales tax expansion. So Washington used to give professional services a pass on sales tax. Not anymore. Now you are paying retail sales tax on everyday business operations like IT support and custom software development and security services and temporary staffing and even advertising. Number 3, they went after investments and also generational wealth. This is not good. They bumped the capital gains tax up to 9.9% for high earners. Now, if you're passing down generational wealth, listen to me, because they completely modified the tax structure here on the estate taxes. So the top marginal rate was jacked all the way up to 35%. That makes it the highest state level estate tax rate in the entire country, in the whole United States. Number 4, driving. They made it significantly more expensive just to get around in the first place. The gas tax increased last July, and they baked in an automatic 2% increase every single year to, quote, keep up with inflation, because that makes sense. So buying a luxury car now, like I've talked about in other videos, officially comes with an extra 8% tax. The tax on rental cars, including Turo, by the way, completely doubled. The fee just to change a tire just saw a massive 500% increase, jumping from $1 to $5 per tire. And finally, we have number 5. We've got the everyday price hikes. The Discover Pass, which everyone knows and loves, and which you need to park at a state park in Washington state, jumped from $30 to $45. Hunting and fishing licenses were hiked by nearly 40%. The annual fee for your driver's license went up. Even non-tobacco nicotine products like Zyn pouches were slapped with an outrageous 95% tax on the sale price. Do you see the pattern? They effectively layered new costs onto literally everything in Washington state, from a tech company's IT infrastructure all the way to a family's weekend camping trip. And right now, right after hitting you with the largest tax package in state history, they want 9.9% of your income too. So I've said it before, and I'll say it again. If you think all business owners and homeowners are going to stick around just to see what happens, I'm sorry to say it like this, but you're lying. You're lying to yourself. I'm literally already getting calls from Washington residents who are saying, I'm done. I'm done with the cost of living. I'm done with Washington state lawmakers literally being corrupt and not caring at all about their constituents and lying through their teeth. As much as we love how beautiful Washington state is, we've just got to go somewhere else. The exodus is literally beginning as we speak. So if you're watching this and you don't make, say, $1 million a year, you might be sitting there saying, Leah, let them pay for it. They can afford it. Doesn't affect me. I need you to listen to me very, very clearly if you're thinking that. You should be terrified of Senate Bill 6346 because we now have absolute on-the-record proof that they are coming for your paycheck next, and I'm going to explain why. During the Senate debate, Republicans offered a very simple common sense amendment. They essentially said to the bill's sponsors, okay, if you promise this is truly just a millionaire's tax, let's put it in writing. Let's pass a constitutional amendment that legally guarantees that this tax will never, ever be applied to anyone making less than $1 million a year. Sounds reasonable, right? Do you know what the Senate Democrats did? They rejected it. They voted that down. What the heck? So I want you to really think about this. Why on earth would the sponsors of the Millionaires Tax refuse to legally guarantee that it only hits millionaires? Because they have every single intention of lowering that threshold as soon as they possibly can. They are using the millionaires to build the infrastructure. They're using them to break the 1933 Supreme Court precedent. And the absolute second that the court gives them the green light, guess what they're going to do? They're going to lower that threshold to catch the middle class. And let me be perfectly clear. This is not a partisan issue. This is not about red versus blue. This is about the fact that your government lied to you. In 2024, lawmakers smiled for the cameras and voted to pass Initiative 2111, which banned an income tax. They told their constituents, "We hear you," but they didn't do it because they agreed with you. They did it to keep the initiative off the ballot. They knew that if you voted on it, it would be protected. So by passing it themselves, they only had to wait exactly 2 years to repeal it with a simple majority. They played a calculated, manipulative game with 448,000 signatures. So right now, as the new administration in DC shifts the macroeconomic landscape and focuses on federal tax breaks, Olympia is using the chaos to reach right back into your pocket locally. They lied to you, and they are building the coffin of Washington's economy with your money. So what do? You don't panic, you strategize. Washington state is shifting. And I swear to you, I'm not saying this to try to be dramatic. I want you to understand what's coming so that you can make educated decisions. Because wealth is already looking for the exit, and you cannot navigate this type of a situation or a housing market just by reading the headlines. So if you own a home in King or Snohomish or Pierce or even Spokane County, you need to understand how this capital flight may or may not impact your buyer pool and your equity over the next 24 months and beyond. And that is exactly what my team and I do. We are the Courage Group, and we don't just open doors. We actually, in case you can't tell, analyze these macroeconomic shifts to protect your wealth. So if you're wondering what your home is worth in this new climate, or if you need to make a move before these laws take effect, we want to hear from you. Reach out. Call us, text us, or email us. Our contact information is right down below in the description. We will have a brutally honest conversation about your specific situation. Do not let them do this in the dark. Thank you so much for watching this video, and share this video with everybody that you know in Washington state. Hit that like button so that the algorithm pushes this truth to more voters, and subscribe to this channel because my team is tracking Senate Bill 6346 every single day. And the moment something changes, I will be right back here to update you. Well, I'm Leah Courage. Thank you again so much for watching. Keep informed and keep exploring, and I will see you in our next video.